Okay. So I'm looking at Alcoa. I'm going to do a video tomorrow on them. And I always have a hard time with these really, really big companies. They're just way too much information to look at. And it gets kind of confusing. So I'll just show you. This is just the summary to start to talk about the company. So it's the world's 8th largest producer of aluminum. And it pretty much works in every facet of the aluminum industry. It does mining, refining, smelting, fabricating, recycling, everything. And it's been around over 100 years, since 1888. And prices are going up. Aluminum prices let me show you. Hey, what's up? How's it going, Udar? So the higher aluminum prices are, the better it is for this company, because they have to create the aluminum. They have to manufacture it and make it. So that's kind of like a fixed cost. It doesn't matter how much aluminum is in the market. They have those expenses built in to generate it. So the more they can sell it for, the better in the market. So that is good for this company, that it's going up. And with EVs getting more popular, that's even better, because the demand is higher for aluminum. And it's really in China. I could show you the China produces more aluminum than any country. So you can see this is the world production of aluminum. See, China produces 39 tons of aluminum. No, 39 million tons of aluminum. MMT, I think that's million tons. And the rest of the world is 29 million tons. So it's mostly coming from China. And their financials don't look so good. Did anybody follow Alcoa? You can see, here's their income statement, which is it was negative in 2019 to 20, positive in 2018. And their operating income is all over the place. It was really good in 2018 at 2.1 billion. Then it dropped all the way down to 400 million, but it's coming back. I guess it's really correlated. I mean, I need to look into these numbers deeper, which I will do. I go through the 10K and try to match up the numbers so I could talk about them on a video. But my instinct, just from looking at this, is that it's correlated to the price of aluminum. So the price of aluminum was low in 2020, as we saw on the chart, and it's coming back up. So that's why their operating income is coming up. Let's look at the statement of cash flows. Well, that has the opposite picture. They're generating less cash flow in the trailing 12 months. They generated the most in 2019. That just shows you the income statement. They had the most income in trailing 12 months, second most in 2018. See, they had this a negative 1.1 billion of net income in 2019, yet they generated the most cash flow. What Coop is that Coupang, the Chinese Amazon? No, that's not. CPNG is Chinese Amazon. Let me open up. Okay. Coupa software. Did anybody see that video I did on PaySafe? I've never got so many negative comments than on this video. People really upset. That's it. Don't get married to a stock. These people, they're so committed to a stock, you can't say anything remotely. And I don't usually bash companies, but if you say something that's not positive, like even neutral, they get so upset and they try to tear you apart. I mean, some have valid points, but some are just ridiculous. And I don't mind if you call me out. Like if I make a mistake, of course I want to know about it. But like, they follow these companies for months, and they say, "Oh, you didn't mention this." Like, there's no way I could know as much about these companies as they do because they follow them for so long, and I can't mention every single detail. So they just kind of, it's crazy. But I guess I should be honored that I'm getting. So Coupa Software, it's a pretty big company, 19 billion. It's down a lot since February. Don't fall in love with stock. Exactly. I mean, PaySafe, I don't think there's anything wrong with the stock. I don't think it's bad at all. They just had flat revenue, and yeah, you can marry GameStop. That's it. Their revenue looks really good. Coupa Software. They've never profited, but they do have positive operating cash flow every year and positive free cash flow. So that's good. That's what you should look at. If you see negative net income, like I remember Tesla had negative net income for so long, but they had positive operating income. And that's almost more important because they just sacrificed profits for for revenue. They just kept growing and spending tons of money on factories and infrastructure and research and development. Well, you think I'm wrong about what? What company? About PaySafe? Right. They spend nothing. It's amazing, right? Yeah, PaySafe was profitable the most recent quarter. It looks they look pretty good. They're they have positive cash flow. That's really good. And it seems like they're probably a pretty young company, right? Where they're like 10 years old, maybe. But what did I say about PaySafe that's wrong? Like, you mean my valuation is wrong? Like, was I bearish on PaySafe? I think I was a little bit, but I even say when I do the valuation, it doesn't mean anything, especially my valuation. If it was like Warren Buffett's valuation, it would mean a lot. But even if I was right with my valuation, it doesn't mean anything. The market doesn't listen to me. It listens to news and listens to like Reddit, Wall Street Bets. It listens to a lot of things like that. It doesn't listen to like people like me, so it doesn't matter. I'm just trying to the strict fundamentals. But it's hard to with a company like that doesn't have positive free cash flow or net income. So Coupa is a global business spend management companies. What do they do? Pioneering the business spend management category. Yeah, I'm not familiar with this. So what's good about PaySafe? Like I said, I can't spend more than three hours tops researching a company unless I've been researching them for a long time. They're big in the iGaming space, right? But why are they so good? Like what? They have really low they don't have a lot of revenue. Yeah, I mentioned that in my video. They acquired Pago Efectivo to get into Latin America. I said that in my video. So what's wrong? Just my estimate of the future is wrong? Well, I know I'm wrong because I can't predict the future. Every valuation is wrong. It might be right for like 1 minute. If I'm right, it's only going to be right for a few minutes because the stock changes price all the time. Like with Macy's, I might have been right for like an hour, but if I am right ever, it's going to be a real short time frame because the price is constantly moving. I mean, PaySafe. Let's look at it. Latin America, you see how Hispanics spend money. What does that mean? You see how Hispanics spend money and send money to each other. I don't know. I guess every country sends. It seems like every country outside of the U.S. sends a lot of money. A lot of people in the U.S. seem to send money to a lot of other countries. But why PaySafe? Like, what besides iGaming? Does it really have a market anywhere else? Like, who? I don't know anybody who would. I mean, I personally wouldn't use them to send money. I could see it if you were. Maybe I'm wrong. Don't underestimate Bill Foley. He knows what he's doing. Yeah, I mean, 2 billion of revenue, or 1.5 billion is a good amount of revenue. I mean, it's not like they're struggling. How do you do poll? What do you do poll? Who's bearish PaySafe? Who's bullish PaySafe? And who's just neutral on PaySafe? I thought most of their revenue was in iGaming. Am I wrong about that? PaySafe. You bought FCUV? Sheesh. FCUV. Focus Universal. Wow. Holy cow. It was $5. And then went way up to over 20. I hope he sold up here. Anytime these run-ups, it's not common it comes back. It's gonna drip, fall down. Because why did it run up? If a stock runs up because the company got a huge contract for like billions of dollars, that's a good reason to run up. If it just ran up because a competitor got a huge contract and now this industry, and they're connected to the industry. Focus Universal. So it pretty much doesn't have any revenue. It's a Canadian, California. So no cash flow, pretty much no revenue. Revenue of PaySafe Groups got and keeps growing. Yeah, it has grown a little bit, like quarter to quarter, but I was just looking. I'm not trying to like kind of fake the numbers to try to make it look bad. This is just the numbers, the annualized numbers. I was saying it since 2019, it's pretty flat. I mean, you can't disagree with that. It's right here on the screen. I didn't look quarterly. I think they're up a little quarterly. But look, 384. So if they did that for 4 straight quarters, that's 1.2 million, 1.2 billion plus 300 million. That's 1.5 billion. It's still not even more than, it's barely anything more. I mean, am I wrong? I'm not wrong. I mean, it's just math. You see that's okay. Let's take that 2020, 1.426 billion. And if you think their revenue is up, even if you multiply it by that by 4, it's still 1.5 billion. It's not really up. I mean, if you're up 5%, I mean, I guess you could say it's up, but it's really, it's kind of like making 1% on your investments for the year. You're down, really. You're not up. If you need to break at least like 3-4% to be up, else you're kind of like below inflation. But you could. What am I missing? Like, are they? Is it something else? FCUV. Focused Universal. Oh, they got uplisted to the NASDAQ? That's why they went up? Okay. So they got uplisted. And that's good they got uplisted, but that doesn't, nothing happened fundamentally for the company to be worth more money. It is beneficial to be trading on a NASDAQ, but nothing changed with the company. It's not the past you got to look at, it's the future earnings and revenue for it. Oh, okay. And I wasn't, I think I was pretty generous. I was, I don't know. Yeah. So this is what my model has as the future projections. It could be more than that. It probably will be more. But all my free cash flows were higher than they've ever had. It's not like Yeah, I mean, I don't think I was really bearish on them I don't think I said anything negative either. Yeah, don't worry about the valuation. It's just a guess. Maybe my whack was high. Maybe I did have a high whack. Maybe if I lowered the whack, it would have been better. Yeah, so Alcoa, this kind of concerns me a little. Does anybody ever look in the equity section at accumulated other comprehensive income? Does anybody know what that is? To learn about stocks? Just like, well, you can do it. I guess you can do screeners. I guess I just, when I hear about them on like Google or Facebook, well, every day I check what stocks went up the most for the day, what stocks went down the most for the day. I look at those stocks and I look at what had the most activity. So every day, that's what I do that every day. So sometimes, pseudo, what's up? But does anybody know what? I'm on the balance sheet for Alcoa. In the equity section, accumulated other comprehensive, well, they have a loss of 5.6 billion. So that kind of stood out to me because that's unrealized losses. Anything accumulated other comprehensive, that unrealized losses. So if you see a big negative here, that could affect the company in the future. I think you guys know what unrealized loss is, right? Like if you own a stock and it's down 50%, that's unrealized loss. You didn't lose anything until you sell it. Once you sell it, then it's a different story. Then you realize it. Same thing if you're up 50% on stock, it's an unrealized gain. You didn't make any money until you sold it. So these are unrealized losses of 5.6 billion. So that could hit the income statement in future years, which is a decent sized number. I mean, it is a big company. But they split into two companies. What year was that? In 2016, they split into two companies, Alcoa and Arconic. Arconic is like 3 billion market cap. Alcoa is the bigger one. Alcoa does the mining and manufacturing of the raw aluminum. Arconic processes aluminum and other metals. So it's a smaller company. So 5.6 billion. Let's see their revenue. I mean, the revenue is only 10 billion, so that's half their revenue. So it's a pretty significant number. So if you see a big negative in other comprehensive income, and there should be a report explaining what this is exactly, it would be good to figure out what it is because it might not be as relevant, like it might not affect them as much. Does anybody ever look at like? Well, I hope you look at the statement of cash flows. That's like the third most popular financial report, right? Balance sheet, income statement, everybody kind of looks at. Definitely the income statement. Then there's statement of consolidated equity. So it breaks down the equity in more detail. And then there should be there's usually a statement of accumulated other comprehensive income. Let me see. Okay, oh, they just have it as a footnote. Accumulated other comprehensive loss. The following details the activity of the three components of accumulated other comprehensive loss for Alcoa. So this gives you information. What do you mean a loss without liquidation? Yeah, like an unrealized is without exercise, without selling it. And you just own it. It's like owning a home that's worth $10 million. You don't have $10 million unless you either refinance the home or sell it. You might not have any money. So unrealized gains and losses. Yeah, it's a loss in value, but sometimes it could really skew the financials if you have these large, like Warren Buffett talks about it. He talked about it at some annual meetings, like how because he owns a lot of insurance companies, so they do mark-to-market accounting. So that you might see these huge losses or these huge gains on the income statement one year, but it's really meaningless. He even says that you just ignore that stuff because they're kind of like passing through a profit or loss as if he sold the security, even though he still owns it. So accumulated other comprehensive income, pensions are a big one, especially with a big entity like when you invest in like GE or a big auto manufacturer like that, or other what other does Walmart have pension plans? So companies that have been around for like a really long time. I mean, you can have a pension plan and you've been in business for a year, but if you've been in business for like 100 years and you have a pension plan, there's just so many people that have retired from your company over the years. You know, some people do pass away and they're not part of the plan anymore, but if they're alive, they're getting their pension. And when you have so many people who are retired from your company, it could be way more than who currently work at a company. Because if you've been around for 100 years, maybe every year, a few thousand people retire and they collect their pension payments. So that has ruined companies, bankrupted companies, because they just couldn't afford to pay the pension of their ex-employees. They didn't have enough money coming in. It's kind of like a Ponzi scheme. All the money comes in, the new money comes in to pay the old people, and you're hoping more new money comes in because more people are retiring, so there's more old people. So yeah, so pension is a common thing in accumulated. Foreign currency, like derivative contracts, hedges, those are part of other comprehensive income. I don't know if are you guys familiar with hedging contracts, like interest rate hedging or foreign currency hedging? Let me see if I could explain it. This might be rough. They're still around. I mean, they're less common. When the 401k was introduced and got more popular, yeah, it became less common. Pensions. So if you own a, you know, go back to PaySafe. Okay, we can talk about PaySafe. It doesn't really matter. So this is the most recent. I want to go through 10Ks on these videos, but I have a feeling it's gonna get so boring. Only like you guys would watch it. Like if anybody came in, they couldn't stand more than 5 minutes. I'm trying to make it interesting. So PaySafe in 2Q, they had 32 billion. So they transferred $32 billion around. That's a pretty big increase, 41%. But revenue went up only 13%. Net income, 6.6 million. So they did have their first positive net income. Do they have the income statement here? It's hard to read. Okay, so the second quarter income statement. So cost of services went up a lot. But it went down. It went down a lot from 2021. It went up from 20. Well, that's 6 months. Okay, so it went up 30 million, and revenue only went up. So as a percentage, their cost of revenue went up a lot more. It's not a terrible thing. I'm just saying, SG&A, it looks like it went up less as a percentage. Well, maybe less. So depreciation, amortization are pretty similar. Not much in impairments, restructurings. So yeah, it is moving in the right direction. They went from, well, this is a 6 months. I wish we had each quarter lined up, but operating, yep, 39 million of operating income compared to 33 million. That's good. Oh, this is why it went up. See, they only had, I'm not bashing them, but the only reason it went up because they had this 47 million in other income and expenses, which is, if they didn't have that, I mean, it would have been a huge negative. Why would it have been such big? Okay, because their interest expense went up 20 million, 42 million. Now it's up 20 million. So they added a lot of debt. Earnings aren't growing though. you can't include other income and expenses. These are they could have sold an asset of something. I don't know. I don't think it looks. It's okay. Is anybody with me? Does anybody agree with that? I wish I could see their quarterly report so I could see what that other income and expense item is. Because like if you sell an asset, that's not like a. See how they strip it out when they do the adjusted EBITDA? They strip out the other income and expense item because it's not part of really. That's it. If you ever see the word adjusted before a number, look at it with a grain of salt because they always adjust it in their favor. So their EBITDA margin went down, so that's not good. I mean, I feel you're gonna get mad at me if I say anything negative. What does everybody else think? They say, yeah, they did acquire Pago Efectivo safety paint in Germany. Wait till these get included in the picture. Yeah, they did acquiring companies. It doesn't mean much until it generates, because you do have to pay for those. It's not like you're organically growing your revenue. If their revenue went up, because you can see their what was it? Okay, so you can see their interest expense went up 20 million. So that means they added. I mean, what is it, like probably 400 million of debt to 20 million of interest payments is probably like 400 million of debt. So there's nothing wrong with adding debt and acquiring companies, but you have to pay for it, and then they need revenue to reflect the risk they took from acquiring those companies. And it did go up a little bit. What did it go up? Did it even go up 20%? It went up 40 million. So what, 12%? And their interest expense went up 50%. But right, it takes time. I'm not saying that it's not going to work out. It takes time to acquire a company and to integrate it into your business and to. Hey, Steven, what's up? You worked at Alcoa in Spain? What did you do in Alcoa? Did you work like in a manufacturing facility? Can you explain in layman's terms alumina versus aluminum, like what the difference is? You need alumina to make aluminum, but is alumina used in other things also, or just to make aluminum? It was a little confusing every place I looked. So if I can't understand something, I don't include it in the video. If I can't explain it real basically where I understand it. I kind of leave it out. If I leave it in, I might say it doesn't make sense, but this is it. But I try to at least understand it. Yeah, wait till iGaming is in full force. What does that mean? It's not in full force now? Are they growing it in other countries? Mechanical engineer, the process of making alumina is a completely different factory. They have two factories, one for alumina and the other one is aluminum. What about copper? Isn't copper a better investment than aluminum? I mean, you can make arguments for both. I mean, it seems like both are in pretty high demand. But alumina is like white powder, right? Is and bauxite is used to make aluminum also, right? It was just a little confusing. I couldn't really. I guess not a big deal. The financials make more sense. Silver, I don't know. I don't think silver is as high in demand as aluminum and copper. Just because there is silver used in EVs, but EVs use a lot of copper and aluminum. I believe you can let me know if that's not right, but I'm pretty sure that. And the big push for all the countries to use EVs is going to really push those prices up. But it's hard to figure these things out. Like you think you figure it out, and then something changes. Like they come out with a new commodity or a new way to make copper that they don't need to mine it. I don't know. Like things just change. Like you can't predict certain things. Like who could have predicted like streaming videos? Like when video stores were so popular, who could have said, well, we're not going to even need them because people can just turn on their TV and watch any movie they want. So you just don't know these things. The biggest factory of Alcoa is in Australia. That is because they have the mineral called bauxite. Yeah, it's Australia and in Guinea and what is it? Bauxite, yeah, Guinea, Saudi Arabia, Brazil, and Australia. That's where their factories are. Yeah, this is where I got that from. This chart. So do these factories, like, I know aluminum is in every country has aluminum except Guinea. Guinea only has bauxite. Is aluminum, like, does aluminum factories need the bauxite? And they do need the bauxite and alumina from the other factories to create the aluminum, right? So do they just, like Australia, it's all in one, Saudi Arabia and Brazil. But like in Canada and US, how do they create aluminum without alumina and bauxite? Do the other factories ship it over? Or am I just totally missing the boat on this? That's what I was kind of curious about, and I couldn't really figure it out. So I kept it high level. And these kind of things are important, but it's hard to really figure out, understand it well enough to make a investment decision. Well, cryptos are are like a quasi currency, right? They're not really used as currency. Because currencies are generally are not investments, and they 99% of current regular currencies, like fiat currencies, like the U.S. dollars, Canadian dollar, they just go up 2-3% a year over time. Cryptos are just to trade, um, except Bitcoin. You can use Bitcoin in some places, and maybe Ethereum, but there's like thousands of cryptos out there. They're not used. No one takes those as currency. They're just traded. You're just hoping somebody will buy it from you at a higher price than you bought it. Uh, not not that there's anything wrong with buying cryptos. I wish I bought Bitcoin years ago, but yeah, I don't get it either. I mean, I wouldn't buy it. So yeah, there's like thousands of cryptos. I remember looking at one day, and it was like there was over 1,000. What makes them currencies if they're so volatile? I think currency is kind of a loose definition. They are called cryptocurrencies, but I don't think they really act as currencies. They're just to trade with. Let's just list 200. I mean, it's ridiculous. I'm at NFTs with a non-fungible token. How does that work? How does that have value? I know it's a unique um, like it's unique. There's nothing else like it. But I'm not sure how that works either. Actually, I know a lot less about that than cryptos. Yeah, like a portrait is an NFT. There's no one exactly like it. It may look very similar, but there's no. But we could create NFTs. This video is an NFT. There's not going to be a video like it, exactly like this video. Um, but yeah, but when you buy when you buy when you buy a stock, you're buying a part of a company, right? And the company generates revenue and um, makes profits, generates cash flow. So you have a piece of that the business they generate, and the more money they make, the more your stock may go up, and you may get a dividend too. But when you buy currency, there's nothing backing it, right? It's not like what in the 80s when gold used to back the dollar. What year did gold? Maybe it was the 70s. You don't remember what year? Yeah. Well, all currency has no intrinsic value. There's no there's no there's nothing backing it up. It's not like Bitcoin is any different than the US dollar. You're just hoping when you buy it, you're just hoping you can sell it at at least a similar price. You the dollar you easily can sell for the same price. That doesn't move much. Maybe if it moves like what 0.001% a day with inflation. But if you buy crypto, it's the same thing. 74, yeah, 74. We had the gold standard. I got to remember that year. $18.47 gold Decker. Has anybody heard of this before? 1847 Go Decker. So slow. $12 down to $3. Internet retail. Small company. $100 million. That's a pretty big revenue number for 330 million market cap. That's like a 3. Yeah, 3 PE. That's not bad. Because we look, is it 107 million? Okay, because sometimes there's a dot, not 107,000. Because we look at these companies that have like 8 million of revenue and a 10 billion market cap. So at least, yeah, this looks interesting. 1 billion 20. And they did have positive operating cash flow and free cash flow in 2020. That's pretty impressive. Yeah, these internet companies don't really have much capex usually. Oh, I had 20 million working capital. Well, that's why. Yeah, I mean, 5 million would have been good if it didn't have so much changes in working capital. That really dragged up their operating cash flow. But still, I mean, I wouldn't look at the cash flow because they're pretty small, pretty young company. But yeah, if they hit $1 billion revenue, they probably would be making pretty good money. They have hardly any debt. You don't have to read the report. They have excess. They have excess liquidity. What do you mean by excess liquidity? They have negative equity. Which doesn't mean anything. People like think negative equity, a company's worth nothing. It's just a balance sheet. It doesn't mean anything. It might be bad, but you just have to look at the balance sheet to see why it's negative. It looks pretty good. Okay, 1847, Go Decker. See, Ben, this is a way to learn about stocks. Is just people. That's how I learn about a lot of stocks, actually, because people ask me to do videos on them. Go Decker's quite a bit. It sells appliances and furniture online from its Baldwin showroom. I think that means Baldwin. Baldwin is in Long Island, but it's at headquarters, Missouri. Maybe Baldwin, Missouri. Okay, I thought it was New York. It looks pretty interesting. They have 92 million warrants. 92 million warrants. Yeah, that could Go Decker doesn't have any debt. Pretty much no debt. 2 million. For what's up, Olaf? EYRO. Yeah, throw out tickers. We can talk about it. It's a good way to learn about the really small market cap companies you guys look at. It was trading at $300,000 a share, and now it's $4. I mean, you guys know why this is like this, right? There could only be one reason. It was trading at $300,000 a share. Now it's down to $4. Does anybody know the reason? How this could be? Because only one stock trades at the $300,000 levels, and it's not this stock. The ASTS, that's ASTS is a finance company, right? Dilution? I don't know what you mean by dilution. No, it's not dilution. Dilution is when you issue more stock. They just did dilute. No, it's not diluting shares. No, it has nothing to do with share issues. Because when you issue shares, your market cap stays the same. And your it would probably look the opposite if they did a lot of splits. but it's not issuing stock. It's just reverse stock splits. That's the only way it could be like this. They did reverse stock splits. They must did a lot of them. And every time you do a reverse stock split, it makes the older stocks look really high. Maybe that's what you meant, reverse stock splits. AYRO, I'll show you. Well, it says they did a 1-for-5 reverse stock split in 2020, but they must have done other ones to have these. Because even at 1-for-5, it would imply this is what's trading at $60,000. Because $300,000 a share, that means the whole company, one share was bigger than the entire company. You can't IP. I mean, you could IP. You can't really IPO for $300,000 a share. Because you need a certain number of shares to IPO with. They must have done a bunch of reverse stock splits. I'm not. A 5-for-1 reverse stock split off range. I guess something got messed up when they did this reverse merger. They did a 5-for-1 reverse stock split, a reverse merger, and a reverse stock split. Do you know what a reverse merger is? Do people know what a reverse merger is? Like a SPAC is a reverse merger. It's pretty much when it's pretty much when a private company buys a public company. Because if you want to be a public company, right? One way, the hardest way is to IPO, which is how we know about it, right? They have to, meet the requirements through the NASDAQ or New York Stock Exchange. That it's expensive, pay a lot of money. They have to submit a lot of paperwork. So you have to hire accountants, lawyers. It's expensive and takes a long time, maybe 6 months. It's just the easiest way to do it is just to, if you're a private company, just buy a public company. So you could, and that happens all the time. Like these companies buy these shells of companies that aren't worth much. Like you can't buy like Microsoft, of course, because no one, maybe Apple can buy them, but can't afford a company that's worth like $1 trillion or $100 billion. But if there's a company that's trading that's worth like $20 million and it's publicly traded, just buy them so you don't have to go through the IPO process, and then you could just sell off the assets and get rid of them. Now, a reverse merger, because if I acquired a private company, say my company, we have 100 million of cash because we're private, but we're doing well. So we just want to go public. So we acquire a public company. So we take their listing because we're one company now, right? So we can both combine, and now we're using that ticker. And then we could just get rid of the public company right after we acquire them, because you're allowed to do that, right? You can you can acquire a company and then years later or even months later say, you know, it's not making us money. We're going to stop doing business because it's a waste of time, or to sell off this business and focus on our money-making business. So that's all it is. This is a private company. That's what a SPAC is, right? A special purpose acquisition company. It's just a shell, a SPAC. Like if you ever look, what was a SPAC I just did? In sport? Was that SPAC? A PaySafe. Okay, so PaySafe was a SPAC. This is how you know it's a SPAC. If you ever look at a stock, obviously it wasn't a SPAC for a long time. Usually you'll see a flat line for a long time because it takes time to find. They found the company pretty quickly. So it was a SPAC. It doesn't really move in price when it's a SPAC. Like the stock price is pretty steady. But once they announce, because this is a shell of a company, once they announced they found an acquisition target, which was PaySafe, then they merged together. And PaySafe, which was a private company, now became public because they were able to merge with this SPAC. And they've been around for a while, but yeah, I think Warren Buffett, he mentioned that, right? When he bought Berkshire Hathaway, the the textile company, right? It was a textile company. They made fabrics. It was a shell. I think so. Yeah, textile manufacturing company. Yeah, he acquired that company. In '62, he began buying stock in Berkshire Hathaway. Yeah, in '64, he made a tender offer to buy Buffett's stake in the company. Drew said Buffett received the tender offer in writing, but the tender was only for 11 3/8. So they made an undercutting offer. Yeah. So, yeah, I mean, it's a good way to go public. But these have any of these SPACs done well? It seems like it's always the same pattern. It goes up real fast and then it just comes down. What are those gambling companies that Golden Nugget and there's two other gambling companies that went public via SPAC. There was like a meme. See, this is obviously a SPAC. If you didn't know, it was a SPAC. because most stocks aren't flat for like a year. DraftKings, yeah. So it's obviously a SPAC because you can't really be flat from like June to for a year straight. I guess it's not possible. There was a dip here, which I'm not sure why, but there's always volatility with every stock. So it's a SPAC, and they didn't acquire them at this point. It doesn't go up. They probably acquired them somewhere around here. Maybe here they acquired them. They just, once they announce we found a company we're going to acquire, Golden Nugget. It wasn't called Golden Nugget. It was called I don't know. The guy who had owned a SPAC. It could have been his last name, like Thompson Acquisition Corp. I don't know. Could have been some weird name. And then when they acquired Golden Nugget, GNOG, they just changed the name and changed the ticker. And then people start buying it even before they actually acquire them. And then this is coming up, so it's a different trend. Let's see, DKNG. Let's see if that follows the normal SPAC pattern. So there's a flat line. And there could have just been some news stories that they identified a target, and then people started buying it, and then came down. And then once they get deeper into the process, the buying starts coming in. So this has done pretty well. It's getting close to its all-time high. BFT. Yeah, Foley-Trazimine. Ben Foley, right? He acquired yeah, DraftKings is a meme stock. People are, PaySafe, it seems okay, but people get so like crazy about a stock, like it's got to go up. This happened and this happened. I don't know. Like it might go up. It's just it's hard to make a successful company. There's not that many companies after 20 years or 10 years that are successful. They kind of like fade off. It could be a good acquisition target. Yeah, I think if you don't mind tying your money up for maybe a year, buying it as soon as they become a SPAC before they buy a company, and then just sit on it for a year, and then once they acquire a company, it shoots up and sell off. If they don't acquire a company within 2 years, they have to give you your money back. But there might be fees. You might not get all your money. I'm not sure exactly how that works, but I know they have to give you money back if they don't acquire a company in 2 years, but I've never seen that happen. Yep. There's so many SPACs lately, it's crazy. Do I have 2021 in one of these? Yeah, you could see 250 SPACs, which is similar to last year. But I mean, there was hardly any before 2020. Like probably every single SPAC that was ever created before 2020, if you summed them all up, probably would have been less than in 2020 and 2021 alone. But it's really just about making money. It's not, as long as it's just another way for these finance guys to make money. Yeah, DraftKings got a lot of publicity, right? I think they have pretty good numbers too. Over $1 billion revenue. You see, this is the kind of revenue you want to see. Whether they acquire companies or not, I don't know from looking at this, but like this is what you want to see. Not like a flat line of revenue for 3 years. This is good growth. And it doesn't matter if they have negative net income, because obviously they're working towards a larger goal. So they're still losing a lot of money. But you have to just focus on the fact that they're growing their revenue. SPACs a way for the original owners to cash out. Well, anytime yes, I mean it is. That's what IPOing is too. That's why companies go public, so they can cash out, or at least take in some cash. Maybe not cash out everything. But yeah, anytime a company, or if a company acquires a smaller company, that smaller company, that's usually the goal of any company when they start. Either you IPO or you get acquired by a bigger company. That's pretty much the two main goals. Unless you're a small business and you just want to make money to live your life and support your family. But outside of the small businesses, people generally open businesses to either IPO or be sold to a bigger company. Because otherwise, you're just running the business till you die and you're never getting money out of it, just whatever your salary is. Catapult. Yeah, I think I saw that before. Went up 13%. That's a lot. Yeah, this is not what you want when you invest in a SPAC. If you pay 10. Paying $10 when it was a shell company, and now it's trading. Well, I guess if you bought it down here, it would have been okay, but it's trading below. Its price before it was acquired a company. I wonder why it's come down so much. I think this is why I didn't do it, because there's only 1 year of financials, 2020, which is the same as trailing 12 months. So it was hard to. I could still do it, but it's just a real big guess. There's another SPAC. It's trading at $10. Is that like the number they all trade at, $10? Telecom services. Yeah, it looks interesting. You can see in Simply Wall Street how they come up with the valuation. So if you go to the valuation, 493, you could look at data. You might be able to find an error in here. Okay. It looks right. Well, it looks like they have a really low discount rate, 5.77%. But like you could see they have negative free cash flow 2023, then it turns positive. And they have them at $5 billion by 2031. That's how they got such a high valuation. Yeah, anything's possible. I mean, you figure if the company's going to be successful, it could bring in billions of revenue. But it's just hard. It's not super common for a company to bring in billions of revenue. Yeah, it's pretty massive growth, 60%, 40%. Yeah, definitely. That's what a lot of these stocks are. But the thing is, even if it went up 600 million, so say a 10x and it was 6 billion, which is a pretty big jump for 600 million. I mean, it depends how. I mean, you're not going to put all your money into these stocks. You put in a few $100. I guess if you hit it, you get 1,000 or 2,000. Yeah, so that's good. If a lawsuit comes out, people sell off, and usually lawsuits don't mean much. There's always lawsuits, but that's just part of business. So it's usually a good buying opportunity. But people have a hard time buying when the price goes down. It's easy to buy when the price goes up because you think it's going to keep going up, and when it goes down, you think it'll keep going down. $100 shares of this stock? Is it 100? So you put like 1,000 into it, depending where you bought it, but yeah, I'll try to do a video. It's not going to mean much because there's very little information out there. Every company sounds great when you read about them. It sounds like it's going to be like the greatest company in the world, and especially when you read what management writes about themselves, it sounds amazing. AST Science, I will part of building the first and only space-based cellular broadband network to be accessible by standard smartphones, called Space Mobile. It sounds amazing. If they can do what they say. But like, what was that video I just did? Luminar. Like Luminar was a SPAC. The CEO is 25 years old, and he's worth about $2 billion. So it's like they have these LiDAR technology, which makes autonomous driving like possible. Like it makes it like where you're much less likely, like you could avoid accidents. It could identify things on the road. So it's going to make autonomous driving possible and even mainstream. I'm not doubting that the technology can do that. I mean, first you have to get it to do that, and it sounds like they're pretty close. But then you have to manufacture it on a massive scale. They're working with Volvo, only because Volvo is like a big investor in the company. So I think they want them to succeed. Is anybody familiar with this LiDAR technology, light detection and ranging? So it uses like a sensor, like a laser, and it goes like it's attached to your car, and it uses a laser, and it's looking all around your car, and like if there's a person, the car is going to stop so it doesn't hit the person, or if there's like something's in the road, or a car, you're not gonna hit a car. Like, so it operates, so the light beams out and then it beams back, and depending, let me see that. And then it could identify how far away the object is from that LiDAR technology. So it does work, but it has to work 100% of the time. Yeah, I don't know about the weird looking smart cars. I wonder if they're autonomous. Because you can't, this is like something, you can make computers, right, that work 99% of the time. So that's not that one. I mean, probably more than 99. Say 99.9 or whatever it is. Say it's 99. So 1 out of 100 computers, it might have a slight defect. Maybe 1 out of 10,000 doesn't work. 1 out of 1,000, the screen is cracked. There's some defect. So you return it to the manufacturer and you get a new computer. But this is like, you can't be 99.9%. You have to be 100%. It's like airplanes. You can't be 99% right on a Boeing, because if that crash happens, it has to be 100%, and nothing's 100%. So it's a lot. It's not as easy as just developing technology. It has to be perfect technology where you can manufacture it at a mass level, and it's always going to be perfect at that mass level. And then you have to build relationships with car companies. Well, they say the autonomous cars that didn't work, that had problems, it was almost every time was due to the person, not the car. But Elon Musk said he's not using LiDAR in any of his cars. He says, this is what he said in an article. It's in the video, but he said LiDAR is expensive, redundant, and unreliable. And he says Tesla's camera, it has cameras in its autonomous cars and a computer, and it's better than LiDAR. It can look all around a car. But of course, he's going to say that because he doesn't use it. But he may be right. If the company has some good patents, it could be a good. Yep. I mentioned that in the video too. Yeah, right here. It was recently awarded its 100th patent. The company. So patents are pretty valuable because like I just did a video on Qualcomm, and 1/3 of their revenue is just licensing out their patents to other companies, and they just collect the revenue. So yeah, it was like $7 or $8 billion just from licensing patents to other. It's mainly cell phone manufacturers, so they can use their technology, their semiconductor chips in their phones. Alcoa. The company. Yeah, sometimes I look at companies and I invest in them thinking they'll be a buyout target. Because if a company gets acquired, the stock usually goes up like 50%. But it's hard to identify those things, right? Okay, I'm gonna close out. Yeah, it's good to talk about this stuff. You could kind of learn about different stocks and what people are following. So yeah, have a good night. I'll talk to everybody. Make sure you watch my video tomorrow morning.